Yo, what's up, Premium Chasers? Today, I'm giving you a full free course on selling options. No paid $4,000 courses needed whatsoever. I'm going to walk you guys through A to Z on everything you need to know to start potentially collecting your first premiums selling options. Let's go. Now, trust me, if you click this video, the idea of options probably scares you. And trust me, I get it. When I was first getting started with options, it was totally a thing where I got into these sketchy groups where they would send me like signals, and then I ended up losing like $5,000+ like buying options. And this crash course, really, I don't know how long we're going to go here, but I'm going to try to lay out everything you need to know and what I've learned over the past 7 years on selling options. Listen, I talk my friends, my family's ears off about this strategy because I truly believe it is the best way to trade options out there for 99% of people. And you're going to see that, right? And I want you to really have that light bulb moment go off because this strategy, right, at a high level, right, allows you to choose companies that you want to get into, and you get to pick your price that you'd buy them at. You collect a premium for that. Then you get to sell those companies at prices that you choose, right, and collect an additional premium for that. And you collect appreciation as well. Now, I'm going to break all of this down for you, right? Now, I saw in our community, and our community is growing so big, guys. I just want to say, like, dude, I got a fire now. Like when I wake up in the morning from you guys, I get bombarded with questions and comments from you guys. And I'm like so excited about this because I'm so passionate about this topic that that's why I created this. I want to surround myself with people like you. If you click this video, like, dude, like you're somebody I want to like get to know, right? Join our community. Now everything's free here. There's no $4,000 course to pitch you. There's 2 links though to help you out. Down below is our Facebook group. It's a free Facebook group. Join there, dude. We got like people in here posting, screenshots. Philip here collected like over $1,000 or whatever, just in premium, right? And when somebody, right? And I'm going to introduce you guys. So OGs, I know some of you OGs, right? Already on this channel. I'm introducing something new. You might be seeing, Papa Warren behind me, right? And you might be seeing this little button next to Papa Warren right here, right? I'm going to introduce you guys to something. When I see you guys collecting some premium, I don't know if you heard that, but it says juiced, and that's what we're doing, right? We're juicing, right, these options buyers and getting them giving us their hard-earned money, all right? But all jokes aside, guys, we're posting, people posting their plays in here. I'm posting my plays in here. So go join the group. It's free. Vibe out. Ask questions. Immerse yourself. And then there's also a second link down there for you as well. Where you can get my trade ideas every single Monday. Nothing to pitch you guys. But this is basically a way for us all to consolidate into one area because I know some of you might be watching this like on X or YouTube or what, and you're not on Facebook, whatever. Like this is going to be like the area where I email you once a week. No spam. Okay. So let's get it. All right, we're going to get it right now. All right, so first things first, I realized some people were getting left behind, okay? Because I see some of you joining our community and you're asking questions that I'm like, yeah. Like, I'm totally cool. I'm going to answer your question, but I'm like, okay, something's not adding up. You're not understanding the strategy in depth. So this video is going to, for the most part, cover 99% of everything you need to know about selling options, okay? So let's dive into some definitions, all right? We're going to keep it simple. You all know what I do. I keep things simple. That's what we do here on this channel. Like, comment, subscribe, do all the things, all right? So what is the difference, okay? And I'm going to explain this as I'm going to explain it to my daughters and my son who's coming in June. Let's get it. The guy's coming. Sorry, dude. I crack myself up too. I'm just having fun. All right, guys. I hope that's cool. All right. So we need to understand what the difference is between buying options, selling options, and the difference between calls and puts. You need to understand what this is. Some of you do not understand what this is. And that is, listen, I don't want you going out there making mistakes and losing money. That's the last thing I'd ever want for you. Okay. Last thing. So what is buying a call and what is buying a put? I recommend you screenshot this for yourself if you're a newbie and you don't understand what this is. Buying a call means you have the right to buy a stock at a strike price. That's all I want you. I just want that to marinate. Just let it marinate for just a second. All right. Buying a put means you have the right to sell a stock at a strike price. I just want you to understand that for a second. Don't try to understand that in very big depth just yet. It's all going to come together here in a second. All right. Selling a call means you have the obligation to sell a stock at a strike price. And then selling a put, you have the obligation to buy a stock at a strike price. All right, I know it's confusing. Trust me, I know. I was there. I know. I'm going to walk you through every single one of these right now so you really understand what's going on. Okay? I'm going to now go to explain like I'm 5. Okay? That's like people like me. I need things explained to me like I'm 5 years old. So, buying a call or buying a put, you are paying a premium for that right. You are paying a premium. When you are selling a call or selling a put, you collect in that premium, right? Juice button, don't make me hit it again. All right? That's selling calls and selling puts. You're collecting that premium from the buyers. Let's go look at some examples of this real quick, okay, to really understand it. I'm just using Robinhood here right now as our example, okay? Whatever brokerage you use, I don't care. I'm using Robinhood here because I know most of you, that's the easiest thing to use and you like to use it. So whatever brokerage account you want to use, go use that. It's it's all the same, right? There's nothing like, it's all the same. Like buying calls, puts, all that stuff, buying, selling options, it's all the same on the platforms, okay? So let's go over to trade options. Now, if you're not seeing options in whatever account you are on, you're going to need to be approved for options trading. Okay. So make sure you go do that. Go to your account settings and it's going to make you just fill out like your basic information and answer some questions and you'll be approved for options trading. All right. Ideally, you want to get level 3 options trading. So as your strategy grows, you'll be able to do some more advanced stuff. Okay. But level 2, you should be fine. Okay. So let's go over here. So now you're seeing our options chain, right? Now you're seeing here where we're selecting our strategy, right? Are we buying or are we selling, right? Back to our little screenshot. Buying or selling? Are we buying or are we selling? You're seeing that right here, okay? Next, you're going to select, are you buying or are you buying a call or put? Right? You see me flipping between both? Or are you selling a call or a put? Okay? So, for example, right, for us, we are options sellers, okay? That is all we do here on the channel. Options buyers pay, right? They pay option sellers for that right, okay? So, let me break this down here for you, right? I'm just going to click sell a call. Right? I'm going to click sell a call. Now from here, I'm going to be able to select my expiration date. We're going to get into that here in a moment on what exactly that means. But for the sake just of this example, I'm just going to select 35 days away. So if I select, I'm selling a call, right? What that's saying is I'm willing to sell my 100 shares, right? On March 28th for a price that I decide. Okay. So let's say, for example, we're just using Palantir as our example. Let's say you bought Palantir around $100 and you know what? When March 28th rolls around, you're totally cool selling it for $110. Okay. I'm just going to click this little button. And for that, right, you are going to be given a premium. Right? We're right here. We're in this quadrant. We are selling a call, right? We're collecting a premium. Now, for that premium, right, I'm just going to put 1 here as our example. You're going to collect premium of $660. You see that always changing, right? Because the market's open. $660, we'll just say. You're going to collect that into your account. So, a couple prerequisites when you are selling a call. You need to have 100 shares to be able to do it because right here where I showed you selling a call, you have the obligation to sell a stock at the strike price that you chose, right? So with Palantir as our example, right, you're saying, hey, you know what? I got 100 shares right here, right? I got my 100 shares of Palantir and I'm willing, right? I am willing to sell them, right, on March 28th for $110, right? And you're going to collect a premium for doing that, okay? Now, where's this premium coming from? To reiterate, it is coming from this options buyer, right? That options buyer is paying you the premium, right? So look at it like you're transacting, right? Listen, like let's say there's this guy, right? right? This is a human being. This is a human, right? I'm the seller. I'm saying I'm willing to sell my 100 shares of Palantir. And then he's going to, for 110, he's going to be like, cool, I would love that, right? So he's going to pay me that $600 in premium. He's going to give it to me from his account, his hard-earned money, right? He's writing my paychecks, right? That's what we like to look at these guys as, right? They're options buyer. You are an options buyer and you write me my paychecks, right? That's you, all right? So that's what that is, right? There's an options buyer on the other side, because I've seen this question all the time from you guys. Way too much. You're wondering, wait, who's giving me this money? Who's giving me this $650 in premium? Who's giving me that cash, right? Where's this coming from? It's those silly options buyers, baby, right? That's who it is, okay? That's who's paying you right now as credit. You see, that's credit. You are given that upfront. Big question. You're given that upfront. You are collecting that immediately. Okay? Just marinate, right? Marinate on that in a second, okay? So, as you understand now already, when you are selling a call, your prerequisite is that you need to have 100 shares of a company to do it. Whatever the company, it doesn't have to be, it could be anything. It could be an ETF, it could be whatever. 100 shares of whatever. You could then do this strategy on and selling a call, right? And an option buyer paying you a premium for that, okay? Just marinate. There's more to cover. I know there's questions like, what? Like, dude, like, we're going to get there. Stay tuned, right? Let's talk about the other side. Selling a put now, okay? So now I'm going to just clear this out, and I'm just going to now, right? I'm on sell, and I'm going to sell a put. I'm going to leave my expiration date here as our example. Now, when we are selling a put, right, as we showed here, you have the obligation to buy a stock at the strike price, right? Let's think about it. You have the obligation to buy a stock at the strike price. What does that mean? Well, if that date rolls around and the stock hits a certain price that you decided, you got to buy it. You got to buy it. Now you're thinking, well, okay. Now, yeah, I hope you're seeing it. Yes, you will need to have that money in your account or your margin, right? So let's take a look at Palantir. Let's say 30 days, you're cool, right? We're looking 35 days, March 28th. You're willing, right? You are willing to buy Palantir. Let's say, let's say $90. Let's say $90. You're totally cool. It's trading at 104 right now. And you're saying, you know what? I'm totally willing. If this thing drops to $90, I'm totally willing and happy to buy this company that I love so much for $90. That's a blessing to buy it at $90. Guess what? There's a silly little options buyer writing your paycheck here. $290 will just say he will give you as premium for saying you're willing to do that. Okay? Again, now we're right here. We're selling a put. We are collecting a premium from the buyer who is paying that premium. Okay, I think we can all understand that. And I know if you're like just seeing this and you're like, yo, where it has been all my life. I know how you feel, because like for the past 7 years, and I tell you, it don't get old. This is so exciting. All right. This stuff is awesome. All right. This stuff is awesome. All right. So you collected your $290, right? Two key definitions here just to understand. And this is why I like Robinhood. Most of you, especially if you're just like a beginner, you'll like Robinhood because it tells you what the strategy is called. So this is called a cash secured put. Okay. So when you are selling a put, that's called a cash secured put. And then when you're selling a call, that is called a covered call. Covered call, right? Covered call, you're covered by your 100 shares. Cash secured put, right? You are secured by your cash to be able to buy it. So just to recap with the put, right? You said right here that you're willing to buy it for $90, right? You said that. So you will need to have at least $9,000 to be able to do this, right? You will need that, right? Because it's 90 times 100, right? Every options contract where we're selecting here our contract is 100 shares, or you can see it even tells you one contract is 100 shares each, right? So if you're buying, right, one contract, that means you are buying 100 shares. So you would need $9,000 in your account as collateral in case Palantir does drop down to $90 and you actually have to buy it. Okay? Squared away? We got this? Okay. So now we're going to go a little bit deeper here because I'm going to assume you understand, okay, I can get in at prices of companies that I like, collect premiums, right? I could sell that company for a premium at a price that I want and collect a premium as well. Now let's kind of go back to the covered call and let's talk about that for a little bit. So let's say you own 100 shares of your Palantir, right? And what did we say? You'd be willing to sell it at, I don't know, what do we want to do? Well, $120, right? And you would collect $375 as credit into your account today. Let's stop for a second. A few things can happen because I know that's what you're thinking next. Well, Pete, okay, March 28th rolls around. Like, what's the play, right? What happens? A few things can happen. Number one, Palantir hits $120. If Palantir hits $120, you will have to sell your shares for $120. Palantir can hit $100 million, or let's just say 130, 150, 160, it could 150, 160, whatever. You will have to sell your 100 shares of $120. But Pete, I'm missing out on gains. I'm selling it at 120. I'm obligated to sell it now at 120. I'm missing out on all the gains of it being the 130 and 150, right? But I missed out on that. Now I sold it too low. That's a risk you need to take, and we're going to talk about that here in a second on how to kind of get your best entries for this stuff in a second. But I want to challenge you to shift your mindset a little bit here, okay? Number one, if you absolutely love a company and you would be brokenhearted for selling it and making gains, then don't do this strategy on. But I challenge you to change your mindset on this side of your portfolio where you are happy buying and selling companies and making money. Listen, just as much as this could run up to 200, 300, whatever, it could just as easily go the other way. You, as an individual investor, will not beat the market, right? Picking individual stocks. You will not do it. You are not good enough. I am not good enough. If anybody tells you here on YouTube that tells you they can that they're doing it, right? There's this many people, 0.1% can do it, right? And they have teams behind them. They have amazing software tools that cost hundreds of thousands of dollars a month that can do it. Right. And I say that with confidence because I know, as somebody that worked at a high frequency trading company as an IT guy, not a trader, what was going down. You ain't beating them, right? You're not beating them. The technology, the tools, the resources that these people put that do it. So how do we win? This is how we win. This is how we can potentially beat the market. Okay? This is how. Locking in real gains. So if you come to me and you bought Palantir at $100, you sold cover calls, sold them at $20 and made money, and you come crying at me? No, I'm just gonna hit you with the juice button, bro. You squeezed the juice and you made money. This is what this game is about. There's always opportunity everywhere, as you're going to see. So let's take this example, right? You got these 100 shares of your Palantir, and you're saying, I'm willing to sell them at 120. I have a little calculator down below not down below, it's inside of our Facebook group. I don't want to have too many links in the description. So join the Facebook group and the calculator will be there. And this is just a simple way that you're going to see what kind of returns you're actually going to be getting, right? So in this example, we are collecting $375 in premium, right? So I'm going to put in the premium count, 375. Strike of option, right? What is strike of option? Well, that's what we're willing to sell it for. So strike price is 120 we're willing to sell it for. I'm going to put 120 there. What is your purchase strike price? In our example, we just said, hey, you bought it around market price at $100, right? You got your shares at $100, right? You're getting a premium return of 3.75% in a single month. If this trade actually gets sold on you, you made 23.75% on your money. right? Because your profit on your shares, right? Remember, these are times 100. You made $2,000 profit on your shares, plus you have the premium. Added together, that's $2,300 in a single month. If you come to me and complain that you made 23% in a single month on a trade, I'm going to have to find a different button, bro. Like, this is how we win, okay? This is how we win. I call this my quad option strategy, and this is all going to come together for you as you watch this entire video, okay? Change your mindset. Again, I recommend, I do it. Have a monthly portfolio, right? That's like 80, whatever your risk tolerance. And for me, it's 80-20. 20%, we selling options, we locking in gains, we doing it. 80% is for the monthly buys. That's my Vanguard stuff. That's retirement. That's some Apple stuff. That's like Tesla, like some stuff I don't want to sell options on that I would be really bummed that if I sold them. So I just keep them there. Okay? Or companies I really want to build a position in that I believe in. But for the most part, most of you shouldn't even be doing that. You should just be buying like your index funds and stuff. And I'll shoot content around on those funds. You'll get exposure to all these big companies anyway from that. Stop trying to pick and win individual stocks. You're not going to do it. Don't let these gurus lie to you. All right? Like, stop. This is how you can win. Because you're picking companies you believe in, you're selling them at prices you decide and collect premium either way. Full stop. Let me tell you something important. Most options, for the most part, expire worthless, depending on the risk tolerance that you take, right? So in this case, there's a few things that can happen. Let's say, 30 days rolls around. What can happen? Number one, like we mentioned, you might have to sell your shares for 120, and you walk away with $2,000 extra in addition to the premium that you already collected up front. You get that immediately when you open the trade, okay? Second thing that can happen, which is usually the most likely thing that does happen, is your option expires worthless and you simply walk away with your premium. If that happens, what do? Well, we come back here and you're like, you know what? Okay, well, we'll just sell another one. Right? We'll sell another one. Now we're collecting another more premium. So you just do it again. You run the covered call and you do it again and collect more premium. Okay. Now there are more advanced strategy with rolling and doing all that stuff. We're going to talk about that in other videos. You don't need to necessarily worry about that just yet, right? Grasp this first. Okay. So those are really the two biggest things that can happen to you. Okay. Okay. Now let's go talk about the put side for a little bit. All right. So let's say you're now wanting to buy 100 shares of Palantir. All right. So what we can do is we can come in here, right, to our sell and put. We're out about 30 days, and we're saying, you know what? I'm willing to buy them for $90, right? In 30 days, I'm willing to buy it, or 35 days for $90, and I will collect upfront $277 into my account. We're just going to do one contract. And just to quickly say, guys, like if you're banking, right, like you can 10 contracts and you collect $2,700, right? Like you could do that, right? You can have as many contracts you want as long as there's silly options buyers on the other end willing to do it, right? But for the most part, with high volatility stocks like this, you shouldn't have an issue, right? So we're just going to select one right there, and you're going to collect, 200, whatever. We'll just say $280 because this thing keeps changing. I have another calculator for you to make your life easier. Okay, again, in the Facebook group, link in description. You're collecting 288, we said? 280. It's just moving, whatever. We'll just say 280. 280. What's our collateral now? Remember, we said we're going to buy it for $90 a share. Times 100, it's $9,000. That's our collateral. Okay, that's our collateral, $9,000. Okay? How many contracts? This is just a little area that I like to have if you're going to open multiple contracts just to see, and you can change that number right here for yourself, so don't worry about it right now. What's our return looking like? You get 3.11% return on your collateral, right? So what is 3.11% of 9,000? It's $280, right? That's what that number is, right? In a month. So our expiration year is 35 days. I like to put that. And that our annual return is 32.44%. We could do this trade around 10 times a month, and if we're able to do it 10 times a year, we will collect about $2,900 in premium. But Pete, come on, can you actually just do this all the time? Let's talk about the situations that can happen with a cash secured put. Number one, let's say that month rolls around, right? Palantir's been kind of sideways, hasn't really done much, right? Okay, your option expires worthless. And you walk away with your premium. That's simple as that. You walk away with that $280 in your pocket. And then guess what? You could be like, okay, you know what? I'll just open another one at $90. I still want to buy it at $90, excuse me, at $90. And you collect more premium, right? And you wait. Now, second thing that can happen is Palantir drops to 90. It drops to 80. It drops to 60. You're going to have to buy it at 90. Okay? So you're going to buy it. But remember, this is a stock that you love and you decided to buy at this price. Okay? And we'll get into more stuff like finding the ideal entries here in a moment. So that you would have to buy now your shares. Your $9,000 would be taken from your account and you'd be handed 100 shares of Palantir. Okay? Now, guess what? You have 100 shares of Palantir. What do you think you can do with those 100 shares of Palantir? This almost sounds kind of like we've did this before. We have 100 shares of Palantir. Yes, we would then go do covered calls on them and collect more premium. So let's say for this example, let's just use this as our example. Let's say you did buy them for $90, right? And you went and started doing your covered calls. And I'll just set our purchase price here now as 90 because you bought them for 90 and maybe you now sold your at 120, right? And you had your covered calls at 120. What would happen if all of these things executed for you, right? Well, you collected your premium of $280, right? On your covered call side, you sold your profit, right? You profited $3,000, right? And then you collected again $280 from here. Your total profit right here would be $3,655 if all the legs of the trade did. Listen, does it always happen? No, but I'm going to show you $3,655 on $9,000. 40% return if those trades all execute. Now, they don't always happen. They do happen if you're aggressive, as you're going to see here as we kind of get into it, right? Where you could be getting in and out, buying and getting in and out of these companies and selling them, collecting premiums, right? And also getting that appreciation sale, which accounts for about $3,000 of it. But if all legs of this happen, you would have collected $3,600, right? In about basically a 2-month period, right? Now, there's one more thing that I quickly want to mention that can happen while you're waiting. So going back and talking about the cash secured put, right? We said we're going to buy it at $90, right? We said we're willing to buy Palantir at $90 here. Well, let's say, you open this up and Palantir just moons. It just shoots up, right? It's trading at like 130, 120, whatever. Well, what happens is your options contract of you saying you're going to buy it at 90 starts becoming worthless sooner. Meaning that you would be able to actually close out your position sooner instead of waiting till that expiration date. Now, to do that, it would require you to give a little bit of that money back on your premium. So let me show you an example, right? So what I like to do with this, I just copy this and then I'll put it right here. Now, for example, let's say 2 weeks from now, like you open this up, things are going, and then 2 weeks from now, some crazy news comes out about Palantir. They got this crazy contract. They're blowing up, right? The sentiment's awesome. Well, what actually can happen is the market might say to you, you know what? Give us $80 back. We'll free up your collateral, and you could go look at different opportunities. So we give $80 of our $280, so we only collect $200. Right? Our return now drops a little bit to 2.2%, but our expiration now isn't 35 days. So let's say we did this in 45 days. What just happened? Our annual return shot up. Okay. Now, this is how I decide when I'm managing my strategy, if I should do it or not. Okay. If I should close out my position or not. Okay. Or if I should close it out early or not. I'll look at the annual return. Okay, if that is higher than, for the most part, higher than waiting for the full expiration, I will do it. Okay. So, for example, let's say they were only gonna leave me with 100. I'm not gonna do it, right? Because I would have to pay $180 back, right, of my premium, and it's only a 28% return. I might as well wait a little bit and see what happens. Okay, so we'll just set that back to 200. How about the covered call side? Should we close? One, that's up to you. You can. Same thing applies for here, but it's opposite. Well, let's say you have a covered call that you're willing to sell them at that 120 price, right? And the stock just tanks. Some news came out. They lost the contract, right? And it tanks. Well, your contract saying you're willing to sell your shares at $120 pretty much starts becoming worthless, right? Because it's less likely to happen in that time frame. So the market might say to you, hey, just close it out. Give us $75 back of that 375, right? And you could close it out, right? You'll close out your position, your shares will be freed up, and you can run another call and collect more premium. I don't do it often anymore. I used to. There are a few situations where I'll close my covered call. Why? Because this part of my portfolio is to collect money, to collect and lock in gains. And you not selling shares cost you a good amount of change. So for my covered calls, usually I'm not necessarily managing them extensively. I'm fine. I want to stick to my plan. I made a decision to sell my shares for a certain price. I am not going to now go back on my original thesis that I built around the trade. And I'll show you guys that in a moment here. A lot of you will get burned because you don't stick to your plan. You'll start rolling out your positions, right? You'll close them out too early, right? To free up your shares. And then guess what? Maybe the stock does that and you're not even able to do covered calls and collect premiums on them anymore. So me personally, for the most part, I let my covered calls get to expiration and I manage my cash secured puts a lot more. Okay? Let's put this together in a very simple graphic that I've created for you. Okay? This is called the wheel strategy, okay? And it all starts with selling that put. You saying that you're willing to buy 100 shares of a company at a price that you decided. You go out there, you sell that put. The next step is, at expiration, did we get assigned? Yes or no? Simple. We're binary. It's a binary question. Yes or no? No? Okay, right? Our collateral gets freed up, and then we can sell another put. We wait. Did we get assigned? No? Okay, let's go sell another put. Right? We collect in that premium. Fine. Eventually, hopefully, you want to get assigned, right? You want to get assigned. So if it's a yes and you did get assigned, now you have 100 shares of a company in your account. We now then go to selling a call. Okay? We sell the call. That means that we have 100 shares as our collateral now, right? And collect in premium. Did we get assigned? Yes or no? No, we didn't get assigned. Our option expired worthless. We go back to selling another call against those shares, collecting premiums. We go, did we get assigned? No, still no, right? Okay, cool. We collected premiums, right? Look at it as manufacturing a dividend for yourself. That's what I kind of think the easiest way to look at it. Now, obviously, it's not a dividend, but you're getting a monthly dividend, essentially, from 100 shares of a company that you own. You can even look at it like collecting rent, right? If you own a house, right? But your shares are the house, and you're collecting rent from your shares from a silly buyer, right? Eventually, you're going to get assigned. That means you sold your shares, you collect that appreciation, right? And then we just go back to selling a put, and it just repeats, and it just repeats. I want to show you guys the graphic for the quad option strategy. This is the strategy that I've been using for the past 7 years, and it has worked well for me. It doesn't allow me to get sidetracked. It allows me to stick to my plan. And this is a very key thing I want for you to understand. Stick to your plan. Don't get sidetracked by all of the noise out there. Okay, there's a lot of noise out there. Stick to your plan. Stick to the companies that you want to do this on. We'll get into that in a second here of how to do it. Okay, so let's recap. What is the quad option strategy? Well, we're selling cash secured puts and collecting premium and getting into companies that we want. We are now then selling covered calls against our 100 shares that we got from our cash secured puts and collecting premiums, right? Then we're collecting dividends on companies as well. Now, a lot of these companies do give a dividend, and that's why I love running them on like Coca-Cola. That offers already a dividend. And I'm double dipping here, right? I'm collecting money premium from the covered calls, right? But while I'm holding those 100 shares and running the covered calls, I'm actually collecting a dividend as well. And lastly, eventually, when my covered call gets assigned, I'm going to collect an appreciation sale check as well. Those are the 4 income streams that you're getting with this strategy. And I think it works absolutely beautifully. Okay. So what's next? Pete, I got questions, man. I got questions. I know you do. We're going to still go over a bunch of different things, right? But if you're everything complicated, like drop comments down below, join our Facebook group, immerse yourself in our community here. Okay, that is the point of this. It's really the only place that I've ever seen where option sellers we can all just get together and just vibe out. And I have such great plans for this community. I want to do like in-person meetups and stuff. And if you're toxic, dude, like don't even be here, please don't. Like if you can't vibe out and you can't have fun, right? Like listen, like don't just go. Right? So let's go into the next step. How do we pick companies, Pete, for this stuff? All right, so I like to use, and I think most of you will find this tool very nice, is MSN Money. So just go to Google, type in MSN Money, and you'll be able to create a free account here. Listen, the only reason I use MSN Money is for my watch lists. I think it organizes things really nicely for me and gives me all the information I need at a high level. Listen, dude, like if you think you're here and I'm going to start drawing on candlesticks and drawing and creating abstract art and making up crap, you're severely mistaken, my friend. All right? That's not me. I don't stare at charts all days. I'm not a day trader. Dude, look at the stats. Look at the stats, fam. Day traders lose. That's that 0.1%. You competing against the high frequency trading companies, bro. You can... They giving out free breakfast, lunch, dinner, got golf simulators. They've never lost in a trading day. And that you think you at your house like is going to be able to beat them? Come on. Stop the cap. Stop the cap. You ain't beating them. You're not beating them. All right. You're not beating them. If you don't listen, you're better off just holding index funds and doing nothing. Again, I believe from the bottom of my soul, and I think you see how passionate I'm at. This is the only way to have any sort of edge in options trading. It's the only way. Everything else is a gamble. This is the only way that I think we are the casino. We are the casino, all right? And we're getting all these options buyers, right, to give us their chips, right? We call that chips. Yes. Okay. So we have to take let's all take a little water break. Take your little coffee break. Okay. So get your watch list set up. Don't overwhelm yourself here. Okay. Pick a few companies that you love already. Maybe it's Apple. Maybe it's Amazon. Whatever it is. Just pick a couple and start just immersing yourself here. The last thing you want to do is come to your options thing and it look like mine with hundreds of companies. You'll get there eventually as you start becoming like a more seasoned options seller. Okay. Why do I like this tool? Well, number one, it gives me high-level overview of the companies, right? Like what's their market cap, what's the 52-week range that it's been trading at, what's the day range, volume, right? Next, I like to go to this fundamentals tab. This gives me high-level overviews like PE ratios, return on assets, equity, earnings per share, margins, dividend yields, what's their revenue growth, and I can sort it too, right? Now, we're not going to go into all of these just yet. I have other content on the channel, right? But start organizing yourself a watch list. So now I'm going to walk you through as you add some companies into yours. Now, if you see some maybe that you like here that I have, like go ahead and add them in there. So let's take a look at some examples, right? So one of the companies that is popping off today, and I want to say, oh, we're going to hit this thing. We're going to have to hit it again. I'm sorry, but we're going to have to do it. Right? Because we made the call in our group about Celsius. Even on this channel, I was telling you guys, your boy was like a professional Halo 2 player, right? And I was chugging them Red Bulls. I still got that kid in me, but now I'm Celsius. I'm Team Celsius. I've been buying Celsius, right? And we made that call many, many times on the channel. And what we doing today? We up 28%, 30%. So we're going to use this as our example. But we're going to give a little to all the people that got into Celsius, all right? So let's take a look at Celsius, right? Now, I see that Celsius is popping off, and that's what I usually like to do. I go in the morning. You want my day in my life? Come in here, go to change. Okay, what's popping off? What was popping off at end of market yesterday, right? Any news about the companies that I'm watching, right? That's what I'm looking at. Just gathering information and kind of conceptualizing it in my brain. Okay, so I'm seeing Celsius, all right, up 28%. All right, let's get it. Like, what do we do? This is a writer downer for you. Green day, sell covered calls. Red day, sell cash secured puts. You're going to see why in a second. So Celsius is blowing up right now. So this tells me, okay, I'm going to go a little bit further on my technical analysis with Celsius. So I'm going to go now over to Yahoo Finance. Right from here, I'm just going to type in my Celsius, right? And I'm going to head over to this chart section, okay? Now, just because it's blowing up today might not necessarily mean that I'm going to go run covered calls against it. No, that's just it's an idea now that I have that I can now take it a little bit of a step further with my research, okay? So here I am on my chart, right? And I'm going to, right, sort my my calendar. I'm going to do 3 months and set your date range to 1 day. Listen, I'm not here. Look, I'm not little candlesticks, a little thingy, right? Like, no, that's not what I'm doing here. I keep things simple. They work for me. I like keeping things simple. And I think you, who I created this channel for, busy people with good careers, you're successful in your own right? Like, you don't have time to be creating abstract art, right? So I'm going to have you add a couple indicators and we're going to speak about them. Click indicators. Now I want you to type in here, BOLL. Okay, and you're going to press Bollinger Bands. Right here, you're going to see period. Put 30. Click done. Okay, let's talk about it. You're going to see this overlay onto your chart. What is this, Pete? What is this? This is called a Bollinger Band. Using data, the Bollinger Band tells you an idea of where a company is most likely to trade in. For example, if we just go out a year, we could see that Celsius, for the most part, hits the top Bollinger Band, retracts. Hits the bottom Bollinger Band, retracts. Sometimes it flows past it, but then it comes back down to reality, right? Hits top Bollinger Band, middle Bollinger Band, and just retracts. It's roughly the range that a stock will trade. Now, it's not a guarantee technical analysis of Fugazi, right? But it helps us build a thesis for a trade, okay? So let's go over to our 3-month chart here. Whoa, what's happening today? Right, great earning. We got a double beat earnings yesterday. That's what. All right, so we could see Celsius popped off. It is now trading over this Bollinger Band, over this top Bollinger Band. It's mooning. This is an incredible time to sell covered calls. I'm gonna have you add another indicator. You're gonna go in here and you're gonna type in RSI. You're gonna leave everything as default. It's going to add this little bar here at the bottom. Now, this RSI is essentially telling you how overbought or oversold a company is. Explaining like you're 5, all right? And this is how I wish people explained it to me because I like things simple, which I hope you do too. Hit like, comment, subscribe if you do. If everybody's buying a stock and piling in, they all want a piece of that juice, right? What happens? The stock goes up, right? The stock goes up. Now, if everybody is selling off a company, man, some news came out, this company sucks. What happens? The stock goes down. That's what the RSI essentially is telling you. It's a relative strength index, and that tells you how overbought or oversold a company is. The middle is 50, right? 50. Anything over 50, you're starting to move towards the overbought territory. Anything under 50, you're moving into oversold territory. Right now, you could see Celsius at 73. We overbought, baby. They're piling in. Why are they piling in? Because we had a double beat earnings yesterday. Okay, and that's why we're trading past this top Bollinger Band and shooting off into Mars. Okay, so when I like to sell my covered calls when it's trending towards the top of this Bollinger Band. So even like right here, right here around like December, right, would have been a good time. So let's go take a look at some of these, right? So I'm gonna go to sell a put. Actually, first, sorry, we got to go to Celsius, Celsius right here. And we're going to go to our options chain. We're going to click sell a put. And I like to usually do things 35 days out, 30 to 45 days out. That gives enough time and it gives a nice balance of time as well as premium. Okay. And I recommend that you stay in that range as well. So I'm just going to click that 35 days out. Now, let's pretend that you bought your shares around $25, right? Now, we want to make sure we're selling a call. And we're willing, if March 28th rolls around, to sell our shares that we bought at $25 for, let's say, $35, right? So we're going to click right here, and we could see we would collect $182 on that. Let's go over to our $182 calculator. $182, right? Our strike is 35, and we bought them for 25. Okay? Our total profit on this trade would be $1,182 if it hits $35 and we sell it, and the premium of $182. Either way, whether it gets to $35 or not, we're getting a juicy 7% return in a month on our shares. 7.28. I like to do, if you're wondering how I'm getting that, I just take the purchase price and times it by 100. So $2,500, right? Right, you're getting on your $2,500 that you paid for those shares, you're getting electing $182. Crazy. All right. So that's why the premiums are so juicy. Now, if this company right now was tanking, this premium wouldn't be so juicy. It just wouldn't be that way. It wouldn't. Okay. So premiums are juiciest on green days when a stock is trending towards the top of that Bollinger Band. Okay. Now, when it's trending down, let's go find a loser. Let's go back to my watch list. Again, I'm looking for losers. Oh, what happened? XYZ? Okay, I'm not going to get sidetracked. Let's go over now to Block, right? Let's go over to our Yahoo Finance, and we're going to click Block, and we're going to go over to that chart. We have our two indicators here already, and hopefully it loads here on us. Let me refresh. Okay. Whew. Wow. All right. Whatever. Let's just stick to the. Look at this. 23 on the RSI. What does that mean? It's being oversold. Something came out, right? I'll have to check. I did not check this morning. Just falling off a cliff. And I love this company. So trending way past down this bottom Bollinger Band. Blown up. Something bad happened. All right. So now we're going to go over, let's say we love this company and we're like, you know what? This is fantastic. I would love to be buying it, right? I would love to buy it, right? Or get in at better prices. So we're now going to go over to ticker symbol XYZ, Block. We are now going to click sell put, and we are going to select, again, around 30, 45 days, I think as a beginner for you is perfect. There are some other cool strategies that we can get into as you get more advanced. I do recommend, I know a lot of you guys are like, how long does it take to get good at this? I think a year. I would say a year. A year of time, you really putting in some consistent time on your education, trading, and learning the ropes here, you're going to be a beast. All right. So coming here, right, we could sell a put expiring here on the 35 days. Now we can say, let's say we want to buy it at 65. It's trading at 69, but if it gets to 30, if it gets to $65, I'm totally willing to buy it. So for that, you'd collect $153.96, right? But this is, again, you would need to have $6,500 to do that. So let's take a look at our cash secured put calculator, and I'm just going to close this out. What did we say we were going to get? $155 on 6,500, 2.38% return in a month. Now, this is more realistic, right? Because some of you are seeing like the Palantirs and these amazing growth stocks, or even what I just showed you with Celsius. You'll see that the more quote unquote stable a company is, your returns typically you're going to see are going to be in that 1.5 to 3% a month. That's where they typically are going to be. Right? Now, if you're going after more riskier plays like a Palantir or a Celsius, that's where they juiced up even more. That's a decision you're going to need to make in your own risk tolerance. But my recommendation is always stick to companies that you love. For example, with XYZ, right? I love this company, right? Totally fine buying it at $65 and then running the covered calls against it. Coming over back to our Yahoo Finance, I want to share with you guys one more indicator that's helpful to add in here. And it's going to help you kind of judge resistance levels, okay? So I like to put my indicator in here, and then I go moving average. Now I put 200 days here. I put 200 days. That's the move. It's going to tell me what my average of this stock has been over the past 200 days. And you could see right here, this line gets added and it says $74. I like to get into companies around that level. And this is usually where I judge kind of like resistance levels. Okay. So you could see if I can get in 200-day moving average for Black being $74, and I'm now able to do cash secured puts at $65, basically $10 under my 200-day moving average, I'm very happy with that. Okay. Very happy with that. Right. So if we go take a look at Celsius, let's go take a look at what their 200-day moving average is actually. Right. Let's scroll down here and you can see it's $41. 41, right? So maybe what does that mean to us? Well, that could mean, right? Maybe we're more aggressive on what we actually sell it for. Maybe it'll actually recover and get back to those levels. Now, there's a lot of news came out, so Celsius has been getting beat up over the past month, but so you have to kind of like look more in depth, especially on these more volatile companies. But for more established companies, right? You won't see such a massive spread between like these Bollinger Bands and the 200-day moving average unless some crazy news comes out about the company. So I created one more quick little information graphic for you, okay? And this is going to kind of be a best judgment for your risk levels, okay? And this is where you're going to look at your deltas, right? And delta is a Greek that allows you to see the probability of something actually happening. Okay. For example, let's say here our $65 put right here. If I click this open, I'm going to get a lot of information here. Now, I don't want to overwhelm you right now because we've already been going over a lot. But as a beginner, for the most part, your most important Greeks are going to be delta and theta. That's really it. The other ones don't necessarily matter as much when selling options. All right. But the most important one I would say for you as a beginner is going to be your delta. So you can see delta here is 0.25. Right. Basically, what this means, right? And again, I cut all the BS out. Basically, what this means is there's a 25% chance that XYZ will actually hit $65 and you will have to buy your shares, right? It's the chance of being assigned, right? The percentage chance of being assigned. There's a 25% chance of you getting assigned here, right? That's not a big chance, right? So what does that mean? Well, that means that you're simply going to walk away with your $155 and then just run the play on somebody else, right? So same thing goes on the other end. If we're just going sell call right here, right, and I'm just going to click open this, 72, right? There's a 45% chance. That's basically 50-50 chance that, Black's going to get back to the $72. So use this to best judge your risk tolerance, especially when you're selling cash secured puts and covered calls. My recommendation is that you stick to a delta between 20 and 30. Right? That way, there's an 80% chance that your option is going to expire worthless and you simply walk away with your premium. So coming over to this, if you are extremely conservative, right? And a lot of people do this. Right? Yeah, listen, we the premium chasers, we the juice chasers. So if you go lower delta, if you do these 10, 20 deltas, your premiums won't be as juicy, right? They won't be, right? But it's okay, right? That's okay as well. If you really just want to walk away with some premium, you could do that, but your return monthly on your collateral, whether it's the shares or the money, just isn't going to be as nice, right? So my optimal for me is 20 to 30%, right? Because that gives me that wiggle room. The 70 to 80% of my options are going to expire worthless, and sometimes I'll get assigned, and I could just run the strategy again. Now, eventually, as you get better, as you grow as an option seller, as you educate yourself in this better, you're going to move into be more of an aggressive delta person. Okay, delta person. All right. And you're going to get into like 30, 40, 50 deltas because you want to get assigned. Right? Because if you're never getting assigned, you're missing out on that profit on shares, which makes up a large amount of extra profit for you. All right. Now, of course, you're still making a great return monthly on your premiums, but you layer that on plus the dividends. That's the quad option strategy, guys. That's the quad option strategy. I hope you enjoyed this free course. If you did, hit the like button, hit the subscribe button, and drop a comment with any questions down below. There's 2 links I need you to click down below, okay? Because I know they're going to help you, right? One is going to be our option selling mastermind. Get in here, right? This is where I'm going to be able to answer your question. You see people posting their screenshots here of their premiums they're collecting. I'm posting my various ideas here. You could see just today, I said I was monitoring Walmart because we're starting to move towards that bottom of the Bollinger Band. And I also talked about Celsius and just congratulating everybody that got into Celsius and making those gains, right? Next thing I need you to click is right here. This is a way for us to all consolidate into one area. You're going to be able to just enter your email. I'm not going to spam you. I'm just going to email you on Sundays around 4 p.m. Eastern time with my premium plays for the week. This is going to include charts. This is going to include a video analysis of why, okay? My goal here is education. It's simple, guys. My goal here is simply education. If you came to here to be flexed on, right, with $1 million portfolios and just trying to be sold a 4,000 course and getting expectations sold to you, you're at the wrong guy. For me, it's to give you the education that I've gotten over the past 7 years and for you to run with it. I believe this is my legacy. This is something that I think is stronger than I can give my kids financially, right? Listen, your wealth, your money that you're going to make is going to be squandered away by your kids and your kids, right? There's a stat, it's like 99% of that wealth is gone by the second generation. But knowledge can be passed down. I want you to become a beast at this. I want you to become an absolute beast at this so you could teach your kids about it. You could teach your friends about it, your family about it, because this is something I believe everybody can do. I'm sorry, I'm going off on them right now, right? But I do. I genuinely believe anybody can do this, and it is a fantastic way to build wealth in your portfolio. That is not taught to people. It's made complicated by books, right? And trust me, I've read them all, right? There's one book I want to actually tell you to pick up, and and it ain't this one, unless you want some bedside reading. Great book, but don't read this until you're like a year into your journey. Not that those fundamentals matter in this market. This one does, right? One Up on Wall Street. This is going to teach you really how to identify great stocks in your everyday life. This book helped me catch Honest early. It helped me catch Arista early. It helped me catch a lot of good companies early. So if you want to I would say like complementary to what you're learning here, because this isn't an option selling book. It's just like a guide, right? Like on the markets. And as a beginner, not even as a beginner, bro. Like I read this book, like I tried it. Like it's the only book I read multiple times. It's called One Up on Wall Street. I haven't even said it, by Peter Lynch. I'm a huge Peter Lynch fan. Pick it up for yourself. Go get an ebook version of it. Whatever you got to do to get yourself a copy. You're gonna love this book. Okay. And you combine that with what you're learning here and you do this for over a year, you're going to be a beast at this. And I truly believe, and I hope you see it too, that this is one of the best ways. The normal people, you know what they're doing that don't know this information when they want to buy stocks? They go out there and they buy it for the market price. Let's say they wanted to buy Block right now. They'll go out there, right? They want to go buy Apple, right? And they go out there, they go, oh, buy order, buy some shares. This isn't what we do. We get paid. We get paid just to say we're going to do something. Whether it happens or not, I don't care. You want me, right? You want my money, right? Well, I'm going to choose how much I buy the shares at, and you're going to pay me because of it, right? So I want you to be part of our community here. Immerse yourself in the content, right? I hope this thing was helpful for you. Help us spread this, right? Like I genuinely believe like the more people that learn about this, and I hope my explanation was simple for you through this video, because I'm as soon as my kids are older, I'm teaching them this as soon as possible. This is incredible information that I believe everybody should know. I genuinely believe that. Like, what other thing can you do with your money that like gives you these kind of returns? I don't know any, and I'm somebody that's been running businesses for 15 years, right? Dealing with inventory, dealing with suppliers, dealing with headaches of employees, and like so much stuff, right? Like, and I'm not saying you have to be a full-time trader by any stretch of the imagination, but like it's a great way to be in the markets without doing gambles. Be the casino. Guys, I hope you enjoyed this. Make sure to hit like, make sure to hit follow, drop any questions in the comment section, and take a look at those 2 links down below in the description of today's video. And remember, sell options, collect premiums, repeat. I will see you guys tomorrow.